Hi there folks, welcome to another clip here on my YouTube channel. So it's Sunday and we have all the time of the world just to have a look at the leading index, the leading European index, stock market index, the EuroStoxx50, the cash market. So this kind of a EuroStoxx50 had a huge sell-off, like a couple of other European stock markets, stock indices like the German DAX, the CAC 40 from Paris, or the FTSE MIB from Milano, or the IBEX 35 from Madrid. All these kind of indices, and on top of that, not forget the FTSE 100 from London. And if you just check out this kind of a huge sell-off from Friday, you will see that there is a sell-off not only with a smaller volume, the volume was, in case we saw that with the German DAX, for example, more than a double size of the usual daily volumes. All right, before we get started with a chart technical approach and a chart technical analysis here, just one kind of information for you guys. There's a red button down here at the YouTube platform. It's quite easy just to press it and to be a member of this channel. Just an invitation, and of course on top of that, very much appreciated if you do so. As well, very much appreciated if you just leave some thumbs up, and just to have a look at the chart technical part. We will move there right now. Okay, folks, let's have a look at the chart technical picture. You see a daily picture from the last six months, and you see the typical Fibonacci analysis I use. And this kind of a starting point is a May 13 low of 3,857.76, and it goes up to the high of November 18, 2021 at 4,415.23. So these two levels combined usually, and the platform is building the Fibonacci retracements. Typical levels like 76.4 or 61.8, 38.2 and 23.6. So these are typical levels. And you see that there is not only that huge sell-off from Friday just because of the new variant from South Africa, the new COVID or Corona variant from South Africa. You see a couple of sales going on the last days before, quite heavy. And you see that there is a huge possible draw to the downside as well, possibly in the next days or even 1 or 2 weeks to come. Just saying, just by analyzing a couple of stages to the downside as well. On top of that, you see an arrow here. It's just an information, mind the gap, close the gap. It's just an information that there is a gap, and this gap is to be closed, not today, not tomorrow, but possibly closed one day. So you see a couple of other arrows. This first arrow here is just touching or showing that 61.8 level, and there's another one showing that 76.4 level. And last but not least, the third one, dipper to that black line here, is a measurement of 5.6% to the downside from that Friday close. So we still have a possible 5.6% downside move, and we reach that black line, and that black line is coming from the pre-corona crisis high from February 2020. Okay, so just saying that there is this kind of a level, and this level goes back in 2020 February. Besides that, you see the relative strength index down here. The last days, of course, because just of the sales, because of the sell-off starting points and the huge sell-off here, we have already a relative strength index in a way oversold territory. Right now, we dipped underneath the point of 18. So, of course, this could be something like direction 15 or 12 the next days to come. No problem, could be. But just saying that we have something like that already oversold territory is just a fact that we could see a couple of relief moves to the upside as well. This is something like, let's say, having just a situation like buying into a falling knife or catching a falling knife. Well, somewhere, somehow, you are trying to catch a falling knife always when you try to buy cheaper. And in case of that kind of a market, it could be the first buy on the huge dip is something like the area I already told you about from that pre-corona crisis level. Could be a nice level to have something like a rebuy into this EuroStoxx 50. Just saying, no advice, just from the chart technical point of view. All right, let's have a look after that chart technical part. Let's have a look or a talk about some fundamentals. Okay, folks, let's have something like a little talk about that current move. What really happened? I mean, it's the typical stuff. People got scared. They got some new informations about these new variants and this COVID, or this so-called SARS-CoV-2 variant called Omicron from South Africa, or let's say, better say, been discovered in South Africa. Just because of the reason COVID or SARS-CoV-2 is like a bitch. You never know where she's been traveling around and where she's really coming from. So you never find the point, something like of ground zero, where this new kind of variant really came from. So it's quite let's say, difficult to just name the right spot where it came from. So it got discovered in South Africa, and right now, of course, they close airports, or they close the gates and the possibilities to travel from South Africa to a couple of countries. And already been discovered here at Frankfurt Airport, not far away from my place here, and been discovered in a couple of other countries like Amsterdam, and even in a couple of other European countries. So right now, from the point we're speaking, we have 3 cases in Germany and dozens of cases in the Netherlands, and it looks like a couple of other cases in a couple of other European countries. And of course that will spread into the US. Of course it will spread in direction Asia. So this is the scary thing about it. Everything looks like that all this kind of problems return to the markets. Less consumption of oil. You see oil prices really taking a fat deep dot. You see a couple of asset classes like stock markets especially, and especially the sectors from the air travel, the oil sector, and especially, for example, airports and all these kind of industries being 100% related to that. Tourism as well. And you see all this kind of a story coming up again. Just because of the reason you don't know 100% yet how dangerous this kind of a new variant is, and how possibly not being capable by these vaccines we already get, that there is a full protection. And it looks like that, for example, vaccinated people with BioNTech, Pfizer, with Moderna, with Johnson & Johnson, AstraZeneca, whatever the hell is out there, are spreading that stuff as well. So obviously right now we are a little bit caught in this kind of a case with that SARS-CoV-2 called Omicron. Typical scenery, we know that from the markets from the last weeks and month, and going back to the crash of 2020, we saw that scientists will discover some new ways. They will possibly find a solution to close that kind of the gap where this kind of SARS-CoV-2 variant Omicron came through the vaccines. And they probably publish the solution in the next days to come, or in the next 1 or 2 weeks. This is a reason to be something like being informed about that kind of stuff. Inform yourself about the current conditions, not via YouTube, not via whatever suspicious channels. Just use scientist pages, websites from whatever institutions like the FDA or the EMA or whatever you can get, but use science. Be a scientist. Be reasonable. Just try to get some informations, really good and qualified informations by people who studied that stuff a long time. All right, just saying that this more important for me, because I simply just shaking and scratching my head what all these guys are doing out there with some kind of suspicious informations. Okay, let's just have a look at swing traders, position traders, and if you like, investors. Because from the day trading aspect, this kind of a situation right now is really perfect for them, perfect for us, because you simply buy and sell like the way you do and of course you like volatility, and when more and more volatility comes up, it's just something like a present for us. From the aspect of a swing trader and position trader, kind of dangerous to step in too early, but simply this is the fact or the reason I just showed you that black line in the chart from the pre-corona crisis high from the level of 2020 February, where this could be something like a bigger support zone. So you could sit out and wait until this kind of a marker has been reached or quite close. You could do something like position trading and step into the next sell-off at Monday, or the next sell-off at the next days to come, and just build into this kind of a wave, which is coming for a relief move to the upside as well. Because when markets tend to be too oversold, there is a relief, a technical relief, and this will just bring you back into the green zone. Talking about long-term investors, well, it's something like a present always when markets are giving you a chance to rebuy yourself in way cheaper. So that's just one kind of attitude. If you just buy for a reason to a long-term investment, it's just nice when you see something like a 5% discount or 10% discount in the long run. And more important to say, where is the change, of course, besides all that kind of craziness about the SARS-CoV-2 Omicron? Stock markets are still, or tend to be, something like the alternative for the current environment, because there are no yields somewhere. Where are the yields? Where are the yields of 1.5% up to 5%, for example? Where do you find them? Stock markets. It still looks like the stock markets are still something like the alternative. And besides stock markets, where is the alternative? Bonds? No way. Commodities? Possibly. So this is something like we should have a deeper look into that in the longer term, into the next 6 to 12 months. Stocks still are the way to go. There are no alternatives. So it's still Tina. There is no alternative. And looking in the next 6 months to come, in direction June 2022, you all know that the FOMC projections told us, the Fed projection levels, so the Fed Watch tool from the CME group, kind of tools, every kind of a tool tells us there is no way that there will be a rate hike in the US until June 2022. And this kind of a rate hike is nothing like having a party. It's just 25 basis points possibly. So nothing like to be scared from a stock market's perspective. So this kind of move back up will be happening somehow. This is not the end of the stock market. All right. As I told you at the beginning, at the introduction, this is Sunday. We don't have any kind of a glass ball. We don't have anything like this will be the truth and this not. Markets are something like a way between that. I absolutely need to say good luck with good new positions, prosperous trades to come. Have a great week out there, and we'll be seeing us next Friday or the next weekend again. Thank you very much for your attention, and see you next time. Bye.